From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Siley. This Tuesday, on a day where we saw Trump trade trepidation, or Trump tariff, should I say, trepidation. Let's have a look at where the market has finished off. Now, we were expecting to hit a record when we came in this morning. We saw US markets start a holiday shortened week with gains for stocks, moderating these Treasury yields. That after we saw Trump's choice of nominee for the position of Treasury Secretary very much taken positively by the market. But then, as you can see, around 10:30 our time, we started to get these, I don't know if you can call them tweets, but these posts on Truth Social from Donald Trump that when he takes office on the 20th of January, he will be imposing 25% tariffs on Canada and Mexico, and a further 10% on China. And that's when our market started to take a leg lower. So really it is all about this tariff trepidation, and it's flown through into the currency market as you would expect. So the greenback very much boosted, also boosted of course by the Treasury Secretary pick of Besant. So the Aussie has crumbled somewhat. I was seeing around 64.39 US cents at one point during the trade. It has recovered, but still holding below that 65 US cent level. And of course, where the Aussie trades is very important as we look ahead to the monthly inflation data for October coming through in tomorrow's session, 11:30 Eastern. We know this is not as important as the quarterly read, but certainly one where the RBA is hoping they will see some more signs of moderating inflation, particularly as we remain at a very different point of the cycle than many other developed central banks, which are firmly on their easing path. And of course, the RBNZ tomorrow expected to cut as well. Let's have a quick look at where the sectors finished, particularly as we started to see this concern and weakness come through. Now, you've also got the Middle East factor playing through with oil prices also down amid the prospect of a ceasefire. Woodside, Santos, Beach Energy all falling quite substantially. Of course, further tariffs to China could very much hurt the profitability of some of our miners. We saw the materials stocks, if we flip the board and have a look at the miners, a little bit okay. Fortescue, though, down by 0.2%. BHP off by 0.1%, just below $40 there. We often flight to gold, of course, in uncertain times, but not when we saw the gold futures price actually slump as some of this safe haven demand eased. Newmont also offloading one of its assets in Canada and it traded ex-dividend today. It was the smaller players, though, that we hit hardest. And then the big banks also hit hard, with the exception of Macquarie Group, which is more leveraged to the US. Its share price rose by 0.7%. CBA shares, though, remember they hit a record $160 yesterday. Today, a little bit of profit taking, down 3% to $154.57. Had a great conversation earlier with Jason Tay. You can find it online, talking about how CBA is kind of trading like a tech stock at the moment. All right, a couple of other companies on our radar. BlueScope and Reese rallying after Trump's remarks that he intends to impose tariffs on Chinese, Canadian and Mexican goods. They are, of course, leveraged to the US. Webjet down after reporting a slump in bookings in its half-year result. The market operator ASX announcing it will implement the final iteration of its settlement system upgrade in 2029. And EML Payments, which was the stock of the day on the call, soaring after underlying earnings rose by 46% in the first quarter of full year 25. Well, a special guest on the COB today, flying in from the UK, Tim Edwards from S&P Dow Jones Index. Great to have you with us here, Tim. How are you positioning as we look at all this uncertainty? And today, once again, we're starting to get a slight indication perhaps of what Trump 2.0 is going to look like.
Yeah, there are echoes of Trump 1.0 in terms of the focus on trade tariffs. Of course, in the initial reaction to the election, one of the themes that stood strongly around developed markets in particular was weakness in developed equities around the world, not just Australia, but Europe in particular. And as that plays out, I think trade will remain a focus not only of the market's mind, but also of the sort of political environment. Or at least last time, there was some of it was driven by economics, some of it really was driven by politics and sort of punitive aspects as tariffs as a foreign policy. I think there are other bigger trends at play that may be dominating the headlines today, and I think in terms of what we're looking at globally, it's a question of dealing with and managing increased concentration has been one of the major themes among our clients through 2024. From one angle, this is thinking about how dominant the very largest US stocks have become. From another angle, it's the fact that among developed markets, the US has risen from about half to nowadays nearly 3/4 of our world developed benchmark is the US. So thinking about managing concentration risk, thinking about diversification, these have been two themes that have been really strong. If I'm allowed to pick one more, the other,
Absolutely.
one of the big questions that we have is, and this is sort of connected, the mega caps have had a great run up, especially in the US, but not just in the US. Growth has led value for not just this year, but really for about 10 years. And momentum has got really stretched. And what I mean by that is winners have kept winning for the past 18 months or so. The things that were doing well kept doing well. And we're starting to see, in place after place, US dollar, you mentioned, the sort of chart of the US dollar is going vertically up. There are other places, lots of places in the market where you're seeing really stretched trends. Now, that's great, but the trend is your friend until it isn't. And navigating a potential weakness in those strong trends that have driven markets up by so much, I think is one of the really important themes that our clients and many investors have in their minds.
So how do you put all that together going into 2025, particularly when we don't know what President-elect Trump is going to do? We know one thing is that he's sort of hard to predict what he's going to do. So then do you drill down further into the micro rather than the macro and look at sort of company performance there?
Well, I think what we might see, or at least what the market is anticipating, if you look at things like options market. So one thing that the market is telling you at the moment is anticipate there might be more dispersion, i.e. a greater difference between winners and losers. Now, there's always a difference, but for example, in Australia, the Australian tech sector is up about 50% this year. Versus energy down, I think about 15%, or at least was the day before yesterday. That's a huge spread. In the US, we've seen divergence between, just since the election, healthcare perceived to potentially suffer versus financials, which might benefit from deregulation. So the sense of a greater difference between winners and losers across different countries, across different sectors, across different markets, that's something that's I think top of mind. Okay, so. Well, in some sense, that's good. There's opportunity. The bad news is there's as much opportunity for glory as there is for embarrassment. More strategically, I think diversification becomes a more powerful tool, right? Some will do well, some will do badly, but unlike, say, the markets of a few years ago when it was risk on, risk off, everything going up together, everything going down together, the potential for diversification, i.e., not putting all our eggs in one basket, benefiting from participation in whoever turns out to be the winner, that may be more strong than it was, and that's actually quite an easy. I don't want to say too easy, but that's something that investors can do something about, right? Rather than concentrating all your bets in one place. Think about diversification.
As you mentioned, tech outperforming energy, for example. What are some of the key investment strategies heading into 2025 across APAC?
So we've seen, it's actually, we've got a very broad business covering commodities, fixed income, equities globally. But there are a few themes across the APAC region and in Australia that we've seen a bit more interest in. One of them I've already mentioned implicitly. So one of the products that we've seen a lot of interest in is actually equal weight indexing. So S&P 500 equal weight, for example. Investors literally say, okay, fine, I want the same 500 companies, but I want a more diversified exposure. And that's been something where we've seen our partners who offer ETFs and so on, they've been very successful in pulling assets. More broadly, in Australia and across Asia, a lot of interest in income. And that might be a bit counterintuitive. Dividend strategies, value strategies, not been performing fantastically well, but investors are actually looking at income and thinking about, and I think there might be a bit of defensiveness here. Like maybe the prices are a bit more stretched. Maybe investors thinking about keeping that equity growth, but focusing a bit more on defensive strategies and focusing on income. We're increasingly seeing options being used in strategies, things like buy rights, partly to generate income. And again, related but very different, themes like infrastructure and real estate, which again are income plays, but also can connect to anything from AI to energy transition. So those are a few of the themes that I've been hearing a lot recently.
When we look at the broader US market, and we keep seeing that hit records, the Russell 2000 of small caps also hitting records. I mean, there's a lot of people saying this Trump trade, so to speak, will last another 6 months or so. But how can you gauge the market using other indicators like volatility?
Yeah, so first, let me just to sort of acknowledge the point that the focus of some investors has been to assume that the new administration will enact policies that favour domestic, mid and smaller US companies. So not just the Russell. There are other small cap indices are available. The S&P 600 small cap index shot up in the immediate aftermath of the election. And it's true, if that manifests, the first part of a price movement is a hope. If there actually is policies that are successful in stimulating the domestic economy, then there may be more room to run. Indices like VIX are they are a measure of fear. They are a measure of how much uncertainty there is. And one of the interesting things is that since the election, VIX has come down quite a bit. Now, part of that is the removal of uncertainty. Right? There was a possibility of, or some investors viewed there to be a decent possibility of a contested election. And that coming off the table, I think, has given a degree of relief, a bit of certainty, at least taking one tail risk off the table. So in other words, or so supposed to say, VIX does give you a measure of it. It tends to overestimate how much risk there will be. It's been overestimating rather a lot in hindsight, but that's often the way.
Hindsight is a wonderful thing. All right, now with our crystal ball, what are you sort of positioning for? How are you positioning for 2025, apart from what we've discussed? Obviously, the likelihood of potential black swan events as well, a lot of geopolitical concerns.
Yeah. Look, at the risk of sounding cliche, as an index provider, we try to measure the markets, not predict them. But I think I can share some of the themes that we're watching and think are important. We've already touched on a few of them around concentration, growth, momentum. I think one of the more interesting things to look at is actually in the fixed income markets. So uncertainty around longer and shorter dated interest rates has been a real feature of markets. You're also in a situation now where in Australia, in Europe, in the US, in most major markets, credit spreads, i.e. the premium you get for taking on more risk, has become historically compressed. Now that's fine, that's great. It means that corporations can fund themselves, even quite risky ones, at not paying really high interest rates. But it does create a risk that where they do tend to be mean reverting credit spreads, and so there is a risk that there could be weakness in the credit markets if those spreads start to increase. And you're sort of a bit like in equities. Higher valuations bring in a bit of fragility. It's priced on optimism. Credit markets priced a little bit on optimism. So there are certainly, well, it's never an easy time to invest, but if you talking about the things that we're watching, that we're thinking about, it's perhaps what joins that all together is we are not priced for perfection, but there's not an awful lot of room for error.
All right, Tim, really great to have you on ausbiz. Thank you so much. Tim Edwards from S&P Dow Jones Index with us. Now, of course, we were talking about equities being down today. The stock of the day, though, EML payments. And Mark Morland from Team Invest and Ben Clark from TMS, joined Andrew.
And it wasn't such a big increase anyway. If you look at it from their earnings, their revenue last year was 243, and this was what, 50? What did they say? 58 was it, or whatever it was? It's not for the quarter.
Yeah.
Not that big a difference.
No,
if at all.
Yeah.
So I have no insight into why people got excited about that. I wouldn't touch this company.
I've looked at it in the past and I've probably similar sort of view, hyper-competitive industry. It doesn't have a track record of growing revenues or generating earnings. So there's probably just, a number of things there that it would mean it's a business that we're just very unlikely to invest in the first place. But
and that was the stock of the day. Meanwhile, if you prefer to buy stocks over socks, and who doesn't, the ausbiz Cyber Monday event is for you. Join some of your favourite ausbiz analysts as they present their stocks on sale. Equities, they say, are undervalued and offer significant upside. It's next Monday at 11 a.m. Eastern. Register now to watch live or on demand, ausbiz.co/cyber, and of course it is free. Okay, looking at the leaders on a down day, Life 360 up by 7.8% and BlueScope up 6%. Worth noting that both of these factor a lot of their revenue actually from the US. Helios up by 6%, Sims Metal 4.4%, and Domino's up 4%. Also, of course, a company that is leveraged to the United States. To the downside today, though, Weebit Nano down 7%. A lot of the mining players, Spark New Zealand, ASX, we mentioned there, of course, its upgrade pushed out to 2029. In the small end of town, EML Payments we have discussed, up 27.5%. You've also got Satire there. I wonder if that's a play heading into Black Friday and what is it called? Cyber Monday. We just mentioned that. And of course, the laggards today include 4D Medical, SmartPay, and Worker. All right, tonight we are getting the Fed minutes, of course, also home prices for September, new home sales for October, and the consumer confidence read for November, along with the Richmond Fed Manufacturing Index. Tomorrow, all about CPI. We've also got the RBNZ meeting and some data on construction work done, which also the RBA does take into account because, of course, if things are being constructed, then that means people are spending and the economy is tracking along. Let's have a look at where the market is tracking, though, and very much you can see when we got that news that Trump had announced these tariffs, the market started to sell off, down by 0.9% on the CBO 200. The ASX 200 closing the session down 0.7%, 8362 is where we are. Big falls in energy players, that's of course on the weaker oil price, gold coming off as well. And then you saw weakness coming through from the banks. Worth noting, CBA hit $160 today. It's now 154.57, so potentially due somewhat of a pullback. Macquarie Group, which is more exposed to the US, up 0.7%. Well, it'll be a very interesting night in the US tonight. Of course, we did see stocks already close at a record, but we'll bring you all the fallout from Wall Street. And of course, all our market action will be live again from 9:45 a.m. Eastern. We'll see you then.